And for the Nigerian market, we did see that market trend lower again yesterday. We've seen a lot of profit taking recently, and likewise yesterday we saw the NSE All Share Index closing at 33,613 points, down just 0.6%, really because of the losses we saw in Dangote Cement. Of course, that large car company always having a huge impact on the market here in Nigeria. And of course, overnight we did hear news about President Goodluck Jonathan finally signing the 2013 budget. It's big budget day in South Africa today, so some budget news coming out of Nigeria as well, after a lot of wrangling between the presidency and the National Assembly. To give us some perspective on what that means for the market, Babjide Solanke is in the studios with me. He's from FSDH Merchant Bank to give us some perspective. Babjide, it's great to have you on our show, and I think it's a good place to start. The impact of the budget signing is something that everyone was hoping would happen a lot earlier this time, considering when it was presented to the National Assembly last year. What are your thoughts on this development and what it means for the financial markets?
Thank you, Wally, for having me this morning. Thank God the president signed the budget, because it's made a lot of things to be stalemated. It's good, positive for the market, for the financial market. If you take the equities market, of course, we will begin to have a clear direction of where the economy is going in terms of spending from government, in terms of fiscal policy of government, so that people can begin to make their own budgets, excuse me, as well, so they can, plug into the government perspective. And again, for the fixed income market as well, it makes us understand where the yields go based on government funding of the budgets, of the estimates of expenditure. But my worry is that, because of course, I don't have the details yet, but I'm very concerned about what happens to the budget benchmark for oil price, because the central bank have said that it doesn't expect the benchmark proposed by the president to be raised by the National Assembly. The National Assembly intended to raise it, and the central bank have said that if they should raise it, that there will be some restrictive, they will become more restrictive in their monetary policy, which means that yields will continue to fall and the equities market will continue to have an attraction. Okay. So it's interesting to see the full details so that we can understand what's going on. The devil is in
the details, and hopefully we'll find out what exactly he signed. If it's what the National Assembly sent back to the president, and of course a little concern there about what it means for monetary policy. But moving on back to the markets here in Nigeria, we've seen it do pretty well this year. Over the last few sessions, we've seen a lot of profit taking. But I think a good discussion to have at this point is, given the sell-off we've seen in certain stocks, the potential for hot money from foreign investors having a huge bearing on this market. How concerned are you about the potential sell-off from foreign investors in this market?
I'm concerned. I'm concerned like everybody is concerned, because we have some level of asset bubble right now. I will say that. If you follow the
think the market is overpriced?
Yeah, well, to some extent, largely to some extent, depending on which sector and which stocks you're looking at. But overall, it's kind of, there's an asset bubble, because if you look at the monetary policy of the advanced economy, it has been expansionary, and they've been, for an instance, the United States Federal Reserve have printed about $45 billion every month, and this money must gravitate somewhere, and yields in these countries are very, very low. So Nigeria becomes an attraction to this money, and this money is coming in. And even data that came out from foreign portfolio investment in Nigeria showed that there was about a threefold, about almost a 300% increase in foreign portfolio investment between 2011 and 2012. Right. Even in January 2013, only last month, we had about $2.38 billion worth of foreign investments coming, and you can see what happened to the equities market. And over 60% of that money is coming into equities, not even fixed income. And you can understand why, because of the falling yield of the fall of course. And even with the falling yields, this is a significant
interest in that market.
Because if you look at based on the carry trade, look at how much those guys are borrowing, how much they're bringing here. Even a yield at 6%, at 5%, at 7%, that's still okay.
Still pretty attractive.
That's okay. Yeah.
Well, okay. Well, in this context, how do you invest in this market? Your thoughts on where the equity market is likely to go, and which stocks are looking attractive for you now?
The equities market will have intermittent profit taking, but for 2013, I still expect the equity market to show strong performance because of what I've mentioned, for the significant global liquidity glut and liquidity gravitating flight to quality, flight to some kind of. So
do you have a forecast for year performance in 2013?
Yeah, we actually had a forecast about 17% to begin the year. We didn't consider the significant impact of foreign investors in the Nigerian market. We will need to review that, but I think there will still be some form of profit taking, some ups and downs. To end the year, I see the market closing between 19 to 22%. you get.
Okay. Well, let's move on to small cap stocks. Of course, they've been in focus recently. I want to get your thoughts on this one because yesterday I did speak to an analyst looking at the insurance space. He felt that there's a bubble going there already. He thinks a lot of people are going to lose money because some are already moving high. But your thoughts on the move we've seen recently? We've seen the likes of DMEA gain about 40% in 5 days. So some concern there with respect to how quickly many of these companies are moving higher. But your thoughts on how investors should be looking at small cap companies in this market now?
Well, like it's just a confirmation of what we said earlier about the asset bubble in the market, and it just follows what we've seen in the market. It just follows what we call the bigger fool concept in finance, which means that I will get a stock at an overvalued price, but I believe there's someone there that's a bigger fool than I have, knowing that this stock is overvalued and the person is going to purchase it from me. Because, of course, the market was undervalued at a particular point in time, and the market had fundamental strong stocks that needed to get to their real value, and we saw that. And by that time, the market began to price those stocks correctly. What we saw because of this significant money coming in, the money were gravitating to and pushing up demand for stocks that ordinarily do not have any reason for them to go up. And this just brings us back to what happened previous year, the previous crash that we saw. When we don't have reasons for why would an insurance company that doesn't get result for about 2 years, why would the price go up?
So we're seeing that
level
happen again now.
But having said all of that, there are still some mid-cap stocks that still have strong value.
Which companies do you like in that space?
I like one stock in particular, IHS, because of the development in the telecom industry, all of the significant investment by foreign, big foreign investors, IFC, and some other majors, and I like what the companies do. And if you check their quarterly earnings, they'll be gradually returning back to profit. There's still a loss, but the rate of losses is declining, and I expect the full year to surprise.
Well, I mean, coming back to the broader market, I see your point about maybe signs of a bubble. Clearly, there are some companies in the consumer space that are really looking really pricey right now. But many will say you need to weigh this against the fixed income space and where yields are going in that market. Now, I guess the bigger question is what does the Monetary Policy Committee do, and what that would mean for yields. But I think the broad expectation is that yields are likely to, if not trend lower, at least stay where they are right now. If that were to happen, then I think that provides some support for the equity market, don't you think?
I agree with you, and that's why I said earlier on that the equities market will still close high, in terms of positive to end the year. We'll see intermittent profit taking. I don't have any fear about the equities market in 2013, by phase in 2014. You get, as you said, what you just said is just correct. I just agree with you completely. Which is that declining yields, of course, in the fixed income space will make money to gravitate towards the equities market. We'll continue to see that, but we'll continue to see some profit taking, as we've seen, because there's an increased demand for foreign exchange from the central bank. And as I told you, about $2.38 billion came in for foreign political investment in January, and in February you can see intermittent profit taking, and you can understand why we should have some level of currency depreciation of the naira to the dollar, because this money needs to be taken out. And some stocks have gained over more than 100%.
Yeah, I think the international WAPIC is up 160% this year, so pretty phenomenal performance. But coming back to the banks, and let's end on that note, your thoughts about the attractiveness of this sector. It seems like it's a place that everybody thinks there is still value left in this market, if you like. The liquidity is, people are comfortable with liquidity of that space, and given where the consumer names are, you get a sense that we might see a sharp move in the banking sector when we begin to see results come out in the next few weeks.
Yeah, I agree with you. For the banking sector, the significant interest because of the liquidity consideration, which is an important consideration for equity investment. No doubt, 2012 was a fantastic year for the banking sector. And why? Because the central bank monetary policy favored them. But we think that the banks need to grow their risky assets going forward.
That's always the challenge.
Yeah, the challenge. It becomes a bigger challenge given the fixed income space and given the monetary policy stance and given the inflation outlook and declining yields. It will not take
So you think there's
more money.
There's some risk of weakness in earnings this year?
Yeah, risk of weakness in earnings this year. But of course, I won't be bothered. If the reform agenda of the government goes ahead in terms of the power sector reform, which significantly brings out
that could balance things out.
That could balance things out, of course. And the banks.
Right.
They're going to have good dividend from them, from most of them.
All right. Let's leave it there. Thank you so much.
Thank you very much.
Babjide Solanke giving us some thoughts on the Nigerian market.